Well, good morning. Thanks for joining us today. I'm Marlon Bowling, your tour guide to the ag commodities. Here it is Thursday. Hope you're having a good Thursday, and that means it's weekly export sales day. And we did get the numbers from USDA a short time ago. Here to help analyze what the numbers mean, I want to bring in Brian Hoops, and he is with Midwest Market Solutions, and he hails from Springfield, Missouri. Well, Brian, thanks again for joining us here on a Thursday morning. And this is something that we always enjoy doing every Thursday at this time to decipher what the numbers mean. Let's walk through some of these and see just what we had for actual sales this past week. We'll look at the weekly export sales board. And on the corn this time around, and what I do is I combine the old crop and the new crop sales together for these. Corn came in at 650,000 tons that were sold this past week. Soybeans, 743,100 tons. Soy meal, 273,800 tons. Soy oil, back to a positive number this week. We sold a little bit, 2,100 tons of it. And the wheat at a, fairly dismal 233,200 tons. Now, we have numbers for grain, sorghum, and cotton and rice as well. Let's go ahead and walk through them. On the rice sales, on grain sorghum sales, we had 159,300 tons. On the cotton, boy, we came down on that, 61,900 running bales. And that includes net reductions for the old crop of 18,700 bales. That didn't help any. On the rice, we had net reductions of old crop of 500 tons, but we had a grand total of 15,100 tons on the rice. So, Brian, when you look at those numbers at first blush, what's your takeaway anyway?
Yeah, good morning, Marlon. There's not much really in these export numbers to look at. You look at the old crop category, and we're right in line with where we need to be for corn and soybeans to meet the USDA forecast. Our new crop categories, we are the lowest in the last 4 years for both corn and soybeans. So pretty dismal start to our growing season now. This week, we've had a tremendous amount of new crop soybean sales. We had one on Monday. We had two sales yesterday, and then another sale this morning, 256,000 metric tons of soybeans sold to an unknown destination. Trade will likely assume that's going to end up being China because that's kind of their MO is they make these purchases, call it unknown destination, switch the categories at a later date. So our new crop sales need to catch up as we are, as I mentioned, the lowest in the last 4 years for both corn and soybeans. A lot of room to improve those purchases. And I think China is worried here, and rightfully so, that our yields forecast to be record large, and we still have fairly tight stocks. What happens if those yields come down and prices continue to move higher? So soybeans, I think, will definitely be supported off of these export numbers and that private sale once again this morning. The weather forecast in the long term still look hotter and drier than desired. That's going to be supportive for the market. The wheat sales, they're pretty disappointing, but they're right in line with where we need to be to reach the USDA forecast. So trade is expecting them to be disappointing, and they were. It's just unfortunate they're not improving as we have our winter wheat harvest ongoing.
Is it possible that China just can't load the ships fast enough out of Brazil that they have to get some from us?
It's certainly possible, but I think these, from what we're hearing, these are rumors going back weeks or so ago that China was in the market, but they're looking all the way out into October and into February trying to get some needs purchased. So these purchases may not last a long time as they're trying to get coverage in that time frame where Brazil probably won't be able to export a lot of their product. It's later this fall and even into 2024 when they're trying to lock in those purchases for arrival.
And then judging by their previous behavior, a lot of times if it's something that they find they don't need later on, or maybe they can substitute it, they'll just cancel it and forget about it, right?
That has happened before, yes. Yeah, absolutely. Yeah.
Hate that. Okay, we'll come back in a moment. And we had beef and pork export numbers that came out as well, and we'll talk about them next. All right, we're talking with Brian Hoops of Midwest Market Solutions. We talked about the export sales on the grain side. I want to take a quick look at the prices and see how the market closed on the Globex. It closed right after the numbers came out. Let's start with a look at the corn. And on the board, everything was about as quiet as could be. September and December, just one tick higher, 0.25% higher. So it didn't really do much overnight. On soybeans, Interesting how you had the nearby August, which is set to go into delivery, I believe, here pretty quick. That was up 29, but September up 18.5. November was up 8.25 this morning, so a lot of spread differential taking place there on the soybeans. On the wheat market, we had the September Chicago wheat up just a half cent. Man, that was quiet for wheat. In Kansas City, it was up 8.25 at 873.5, and in Minneapolis, we finished up overnight with September 6.5 higher, and it was back up above $9 at 902.25. Now, I want to take a look at these beef and pork export numbers that came out a little bit ago. And how did they fare compared to last week? Well, in both cases, they were a little better. On the beef, 21,600 tons. And on the pork side, 25,500 tons. Bit of an improvement. So, Brian, are they really, really good or just kind of a yawner this week?
I have to go with the latter there, Marlon. Much of it is a yawn type export numbers here for the grains, beef, and the pork numbers. China didn't really buy any new pork, but they did take some shipments of previous purchases. They were not much of a buyer of beef either this week, and so our sales are really not all that exciting without them stepping in and being aggressive buyers. Of course, Mexico shows up once again. They've been one of our more consistent buyers of both beef and pork. No cash cattle trade yet, and we're kind of at a standstill in the Southern Plains. 180 to 182 would probably buy some cattle this week, especially with the heat that we're seeing. But so far, we've not seen any real packer movement or trying to be aggressive in getting anything purchased.
Do you think the wholesale trade on the beef and the pork has kind of leveled off now for the time being or not?
Yeah, I think so. The Packers have slowly reduced their kills a little bit. We're looking at 620,000, 625 kill week, down from a previous weeks that we've seen in the 635 to 45 range. So that does help prop up those boxes a little bit. So I don't know that we're ready to see a big resurgence and rally. Demand may not be there right at this time of the year, but at least it's kind of stopped the bleeding and leveled off. So hopefully that's the case. The hog market here, we've seen very strong cash trade going into the summer months, and I don't know that that's going to be sustainable as we go into August and September and later fall months.
A couple of things caught my attention here a little bit ago on the markets. One is the U.S. dollar index. We can take a look there, and just to point out that it is gaining sharply this morning. We're up over 500 points on the September futures. Also on the crude oil, keep in mind the Fed raised interest rates 25 points yesterday. Crude oil, West Texas crude, September up 74 cents. It's $79.52. It bobbed up above $80 for a little bit, but it's down just below $80 right now per barrel. All right, thank you, Brian. I appreciate the time. Brian Hoops, Midwest Market Solutions. So, Tammy.